Welcome back to the Personal Finance Project. Today we are doing another Financial Advisor Reacts to Unsolicited, Unregulated Advice on FinTalk, which is the shadowy corner of TikTok where this sort of advice is given. So producers Hannah and Kira have found a couple of videos and they want to get my thoughts on the matter. And so we are going to dive right in.
If I were starting over in my 20s and wanted to make $1 million in the next 1 to 2 years, here are the 3 things I would do immediately. Number 1, I would buy an existing business with owner financing, and I would implement modern marketing and automation tactics. And yes, this is doable with little to no money. Start by going to BizBuySell or LoopNet.com. Number 2, I would leverage any credit or borrowing opportunities I had, and I would go all in on crypto research and trading. There's huge opportunity in crypto right now, especially if you're following new coin launches. Pro tip, become an expert airdrop hunter. There's just huge potential here. Number 3, I would immerse myself in AI and become an expert in the field. From there, I would launch and test AI-generated art, digital products, or educational-based AI talking head content. Once I got some traction, I would work endlessly to maximize my eyeballs and revenue and engage with associated influencers to help. Without some risk and trial and error, you'll...
All right, I think that is enough of this video. Now, if you're just listening to the audio version, this is a white-haired, two-tan man walking down the street with his AirPods in. Pretty classic presentation for this kind of video. And he's going to give us a lecture on how if he could rewind the clock and be in his 20s, this is how he would make $1 to $2 million relatively quickly, which I think in these videos, it's an easy answer just to say I reject the premise. But in this one, I sort of do reject the premise, which is that there are all these opportunities that exist out there for young people to make $1 million in a very short period of time. This, much like all the other videos we've seen, is going to leave out one very essential part of the equation, which is how much risk is it that you're going to need to take in order to make this happen? So I jotted down some notes as to what I'm going to be spending my next few years doing in order to get rich quick, which is the first one was buy an existing business with no money. That immediately strikes me as kind of a risky endeavor because you're relying on what he's saying, seller financing, which is essentially the seller selling you their operating business for, I'm supposing, reasons that are going to remain totally ignorant of. And they're going to allow you to pay this person over time. So you're going to sign a promissory note, ideally, or you're going to be using money that's being generated from the business in order to pay off the pre-existing owner. And yet somehow you're going to be able to do this without putting any of your own capital at risk. Now, what that's saying is you're going to be immediately right out of the gate as a 20-year-old, you're going to be buying a business from an existing person. You're going to be immediately plunged into debt in order to do so. And now you're going to take over the responsibility of running this business. Now, if it's a business where you already have some accumulated expertise, I could see how that might be a good idea. But if you're in your 20s, I'm not real clear on exactly what sort of business that you're going to be buying. He leaves that bit of analysis and all of the underwriting and due diligence that you're going to need to do out of the equation. And he's just saying, buy an existing business on one of these websites, and this is a sure way to make a few $1 million in the next couple of years. So step 1, buy a business with no money. All right. Step 2, take leveraged bets into crypto and crypto trading. We're already in debt because we've just bought this business, and now we're going to have to spend all of our time running it. But now he wants us to make leveraged bets in crypto and also become what he said was an airdrop hunter. At this point in time, I'm going to have to claim ignorance. I have no idea what that is. None whatsoever. I don't know what it means to be an airdrop hunter, but I can tell you this. Leveraging credit in order to make bets on crypto has probably been a very disastrous investment, not because crypto has not gone up over time. It definitely has. But the problem is that that is one of the more volatile assets that you could put some money in. And if you make a leveraged bet on those assets, you can get margin calls, at which time they might liquidate your entire portfolio and you are still on the hook for paying back the loan you took in order to buy those assets. This is, absent from the video here on FinTalk, an extremely risky investment strategy. I'm not saying that there aren't a few people who got ludicrously wealthy making these kinds of leverage bets. I'm sure that those people exist. But what I can tell you is this guy didn't do that. And this guy's not going to be left holding the bag if all of your crypto is liquidated in order to satisfy a margin call and people come after you personally to get their money back. So this is not a bit of advice that I would ever give to any of my own children. I mean, like I said, I kind of reject the premise of the get rich quick scheme right out of the gate, but taking a leveraged bet into a highly volatile asset is a sure way to find yourself in deep financial trouble. Not something that I would suggest that you do. And then finally, and this is where we actually are going to have a little bit of alignment. He says, immerse yourself in AI. Really love that part. And then he took a hard turn to the left and said, so that you could develop AI generated art. Well, it seems to me like if everybody with a working computer could be in this market, you're going to have a real tough time differentiating yourself on AI generated art. And then again, I thought the whole point of AI was that we could outsource the more mundane parts of being a human being so that we could spend our time, creating art by our own hand with our own mind, just on paper or something like that. So I don't really understand how it is that you're going to make a highly differentiated product using AI to create art, and that you're going to find a ready market for people who are so willing to buy the art, even though they have all the same tools you do to create the exact same art. I don't get it. And this is kind of the problem with the NFT deal, was a lot of people thought that these non-fungible tokens were going to be worth something because they were somehow non-fungible, only to discover a digital image is, by its very nature, extremely fungible. You found that these tokens created by guys like Logan Paul, you could just print them from a standard computer and you had the exact same artwork that he did. And it wasn't, as he soon discovered, it wasn't worth anything, nothing. So I think that immersing a person who is now on the cusp of entering their career, you should very much familiarize yourself with these AI tools, because I do think that he has a point. People are going to be leveraging these things in order to be more efficient workers in the future. I don't think it's going to be by creating art or educational content, though I do think AI will serve a very important role in education, in as much as you can have highly tailored educational solutions for people with various learning styles. I think that's going to be a big part of the market. There are already companies out there using this right now. So I agree. Immerse yourself in AI, but, and this is something Scott and I go back to all the time, where is the advice that just tells you to get good at one particular thing and to get so good at it that they cannot ignore you? That's really the skill set that a person should have, is be the best thing that you are going to be good at. Find where your talents are, find where your interests are, and try to turn that into money, but be too good to be ignored. That would be my advice. Don't try to get rich quick by taking leverage bets into crypto or by buying an existing business and plunging yourself deeply in debt only to be saddled with running that business. Because remember, he said buy an existing business and then go all in on AI. So it's like, I'm not sure that you can do both here. Okay, let's move on to the next video. Now, I love videos like this next one because the heading on the video, for the benefit of people who are just listening, is "This is why financial advisors are a scam for most people." Immediately, I'm intrigued.
So I was talking to my girlfriend on the phone the other day, and we're catching up and talking about her new job, and she's making more money and how she's thinking about how she needs a financial advisor to manage it. And I immediately said, immediately no. Until you have a very complicated portfolio that involves like real estate and tax loopholes and all that stuff, you would just be giving your money away, because financial advisors, to manage normal people's money like us, 3% on average of your entire investment account.
Wow.
Whereas if you just invest in ETFs and do that yourself, 0.05% of your money is the cost to do that. So I really believe this is like a woman issue. I don't hear that many of my guy friends saying that they believe that they need to go pay somebody else to manage their money. We as women, we can manage our own money up until a very, very high point. And I think for the majority of us, even 5 figures, 6 figures of management, we can handle that. I made a video about this. Just cover your bases, invest in some pretty stable, well-diversified funds. Don't put a ton of cost into it. Done. Ask me if you have any questions.
Nowhere in this video does she talk about how all the various tools and techniques to build your wealth should be coordinated and used. Absent this video, although I suppose you could go to her, because she did say if you had any questions, you could go to her here. Absent from this video are a young person just starting out is going to have access to a range of various financial accounts and products. Maybe the financial world has overcomplicated things, but we're inheriting this, and this is the field on which we need to play. So if you do just a little bit of research into the state of, say, 401k allocations, a lot of people fail to, one, use their 401k because they just don't know how. And even if they are automatically enrolled in their 401k, and there are some plans out there that are doing this a little bit better by having them automatically invested in, say, an appropriate target date fund, but that target date fund has to be constructed and managed by a professional. So kind of beside her point here. But in any case, a lot of 401k plans are just left in cash because people are overwhelmed by the number of choices within those plans, and they don't know how to best allocate their money. The other thing absent from this is how you might use a 401k in conjunction with your Roth IRA or your traditional IRA. How might you use your HSA? We did a whole episode kind of picking through exactly how you could optimize using your HSA, not just as a vehicle to pay for your qualified medical expenses, but as sort of another retirement vehicle. I think that people don't really understand or grasp fully all of the various options that they have just within their 401k plan. She's not talking about how much life insurance you might need or how much disability insurance you might need. She's also not talking about how if you needed to access money from a qualified plan, what all of your various options might be. What are the exclusions from the 10% penalty if you needed to withdraw money from an IRA ahead of age 59 and a half? A lot of people really want to distill financial advice down to just 3 basic points. And even at the end of her video there, she talks about how just buy a couple of, funds that don't put too much cost into it. Which funds? How much of each? Where should I own them? Why should I own them there? Are there tax implications if I sell them in less than a year? What if I hold them for more than a year? None of that is going to be covered here. And it is really seductive to think that we can distill personal finance down to something that we might be able to fit on a 3x5 index card. And there are certainly a lot of points that she makes here that are not bad. I mean, you could certainly do worse than the things that she's saying here, but these videos never, ever account for what a person might do if left to their own devices. They just assume that everybody is going to maintain with perfect fidelity a very well-established, disciplined financial plan that they were able to construct on their own. It would be a bit like saying, hey, you could represent yourself in court. It'll save you a lot of money. But the quip from lawyers is he who represents himself in court has a fool for a client and for a lawyer. It's much the same in financial planning. So that's my thoughts on the shadowy corner of TikTok that they call FinTalk, and stay tuned for another segment.
Thank you for listening to another episode of the Personal Finance Project. This show would not exist without the help of our brilliant creative director, Kira Minifield. Kira, thank you for everything you do to keep this show running. On to the disclosures. This broadcast contains the current opinions of the hosts and are subject to change. The broadcast is provided for informational purposes only and should not be considered investment advice or recommendations. Investors should obtain professional advice before making investment decisions. This is not a complete analysis of every material fact regarding any company, industry, or security. The information has been obtained from sources we consider to be reliable but cannot guarantee their accuracy. Robert W. Baird & Co. Incorporated is not a legal or tax services provider, and you are strongly encouraged to seek the advice of the appropriate professional advisors before taking any action. For more information about any companies discussed, please contact Baird. Past performance is not indicative of future results, and diversification does not ensure a profit or protect against loss. All investments carry some level of risk, including loss of principal. An investment cannot be made directly in an index. Investors should consider the investment objectives, risks, charges, and expenses of a fund carefully before investing. This and other information is found in the prospectus and summary prospectus. For a prospectus, please contact your financial professional and read it carefully before investing. Annuities carry unique risks, including market risk, investment risk, and claims-paying abilities of the insurer. There may also be instances where a contract will pay out less than the premiums paid or expire within the lifetime of the insured. There may be penalties for early withdrawal, and they are not insured by the FDIC because they are insurance, not an investment. Investors should consider carefully information contained in the prospectus or, if available, the summary prospectus, including investment objectives, risks, charges, and expenses. You can request a prospectus by reaching out to your financial advisor. Please read the prospectus carefully before investing. Investment returns will fluctuate and are subject to market volatility, so that an investor's shares, when redeemed or sold, may be worth more or less than their original cost. Unlike mutual funds, shares of ETFs are not individually redeemable directly with the ETF. Shares of ETFs are bought and sold at market price, which may be higher or lower than the net asset value, NAV. Baird does not issue or underwrite mortgages and does not service mortgage lending services. Any references to mortgages in the financial services offerings are purely intended to convey an engagement in this holistic planning process, with this as one piece of the larger picture, which may or may not apply to all clients. This broadcast may not be reproduced without express permission of Robert W. Baird & Co., Incorporated.